This past week we had an event, a stock market sell-off that caused a temporary dip in mortgage rates, and many of you may have gotten emails or text messages. You might even get letters in the mail. By the time you get them, it's already going to be a moot point because the event has ended. But it brings up a reason to send this week's Todd Talks video to show you where rates are at and how they work and why and when you should refinance. The why is sort of easy. You want to lower your payment and lower the cost of your mortgage. But the when is the important thing. You want to time it to make sure you get the most bang for your buck. So let me show you what happened this week. There was a huge sell-off in the stock market that started in Japan and carried over. And you can see here, this is the mortgage-backed security market. And as these prices go up, that means rates are going down. So you can see there's a rally, then a huge rally. But then the stock market sort of settled down. It was more of a 1 or 2 day event, and rates have come back down. And the way rates are calculated is rates are based on what's called a spread between the 30-year U.S. Treasury, which right now is hovering at 4.284%, and where the mortgage rates are at. So what the spread, let me show you what I mean by the spread. So I came to Mortgage News Daily. They do a daily rate, and they just basically say, mortgage rates are not lower this week. They do an average of all the lenders out there, and now they're trending lower over time. And you can see it's a little bit of uptick the last couple of days, and the average is 6.63. So you take the 6.63%, and then you subtract that by the 4.282, which is right here from 10-year Treasury. And you can see the spread right now, which is the difference between the 10-year Treasury and the mortgage-backed security, is around 230 basis points or 2.34%. And so the Treasuries at one point on Monday hit 3.7% and then bounced off that low. Until we see U.S. Treasuries go below 3.7%, and that will take economic news of a job slowdown. That's what you want to hear. When you see job slowdown happening, we thought it was going to happen, but today's jobs numbers came out and they were better than expected. So that's pushed rates back up. When we see a job slowdown and then we see the Federal Reserve start to cut their interest rates, we'll start to see the U.S. Treasury market and the 10-year Treasury specifically start to come down in the yield, and then we'll see mortgage rates drop as well. So whenever you're looking at that, you look at the 10-year Treasury and add like about 2.5% to that, and that's about where mortgage rates will be. Now, historically, the spread's been closer to 1.75% higher than the 10-year Treasury. The reason why they're so much higher right now is that the investors in the secondary market that buy and service all mortgages, they believe that eventually there's going to be much lower rates and that everyone's going to refinance. So they're charging a little bit higher spreads, and they're charging discount points right now to actually make a little bit more money on what they believe will be a short-term note. So this specifically applies to anyone that's purchased a home from 2022 or beyond. If you're one of my clients or you're a homeowner that would like to work with me, we want to look at your situation. There's no exact rule of thumb on when to refinance. Generally speaking, people will say you need at least a percentage lower interest rate. The reality of it is that's probably a good general rule to look at it, but to make sure the refinance is right, you need to do a total cost analysis, which you take your current loan and you compare it to the new loan and all the costs of setting up your new escrow account, the transaction fees for the new loan, what the new interest rate will be, and then on a side-by-side basis, what kind of savings you get over the next 3 to 5 years or maybe up to 10 years to make sure it's the right decision. No other lender is going to do that for you. They're just going to sell you either on a lower rate or a lower payment. Whatever they think you want to hear as a hot button item is what they promote. But there is a way to do it properly. So if you did get excited this week, hopefully if you did go into a refinance somewhere, hopefully they locked that interest rate in, because if they didn't lock it in Monday or Tuesday, it is now gone. And know that rates are going to come down. We will reach out to you if you're an existing client when they're in a target zone to refinance. If you are an existing client or someone just watching this video and you want me to look at it for you, it's a free analysis. You just send me your most recent mortgage statement and I'll do a total cost analysis to see when would be a good time to refinance and what would be a good target rate for it to hit. So when it hits it, we know that's the good time to get moving forward. So I hope you found this helpful. Hope you have a great day, and please feel comfortable reaching out to me with any questions. My name is Todd Baker, DFW Mortgage Master and Certified Mortgage Planner.